It seems as though people aren't particularly confident about the Nigerian market at the moment. Investors taking a bit of a sitting on the fence type perspective, and that's despite all the good things. Solid elections, stable ushering in of a new cabinet, and also some good results and market reforms, but people are holding back.
I think that we need to understand that the Nigerian capital market has structural defects. I think that you'd notice that in most markets, the dealers are the first ones who make the charge on bargains. And in the case where the dealers have had their capital eroded completely, there has to be a framework to build those companies back. I mean, if you don't build those companies back, you'd have what you have now with the foreign investors doing much of the bulk breaking in the market. And then, of course, you have the residual pension funds who play in the market in and out, and the die-hard retail investors who constitutes the motley crowd of shareholders associations. So there's structural defects. You need to get the dealers back in the market again.
For the dealers that are active, that are a little bit confident, how do they see bargain hunting? Because we know that some of the good tier 2 banks have PE ratios of about 9, just around 9%. So there are some bargains. Where do they see them?
Well, for those banks, I'd say you put them in what you get as a good bargain now, and what you'd watch list. I would go for Zenith. I'd go for GT Bank. I'd go for Sky to a certain extent. I'd watch list Fidelity and Sterling Bank.
We also have a situation, as Mashudu was saying, with a few people retreating from rescued banking stocks. There is that September deadline looming for some of these mergers and acquisitions and recapitalization processes. What's your view on that process at large?
Well, I think that's a time bomb. We hope it will be diffused. I don't think any sane investor will put his money in a bank that has a sword dangling over its head. But I think that in normal Nigerian fashion, we will resolve that in due period. The new investors need to demonstrate to the regulatory authorities that they're not old wine in new skin. I think that's where the real trouble is. I mean, and once you're able to demonstrate that and you bring in really new fresh funds into the markets, I think that it will smooth sail.
All right, in general, those coming into the market are looking for just dynamism, fresh things that the market has to offer. We already know about removing the restrictions, for instance, on bond holdings by foreigners. But what else? The new executives are talking about introducing things like short selling, securities lending, those kinds of products. What's really needed here?
I think those products are really needed. I mean, you need to put a combination of speculation and risk management into the markets. If you notice, in the meltdown of 2008, everyone was exposed in one direction. And that's the problem you have with the Nigerian market. You make money only when the shares are going up. You should be able to make money both ways. And those kind of products give you the opportunity to make money in both directions. So if you predict the direction of the market, you can either buy an option or you can short sell, and you will be in the money. And if you predict the market right, you make money, it encourages investors to come back, and it puts a shot on the arm of the stock market.
We're also told we really need to see new listings, some corporate issuances of bonds. We need to see local Nigerian businessmen and women having confidence in their own stock market. Any indication to that effect?
Yes, I mean, I think that the Nigerian businessmen have confidence in their markets. But you see, you need to stratify these markets for new listings. There are the SMEs, which is the low tier. There's the middle tier, which is very thin. And then there's the top tier. Now, the top tier is used to be in the peak of most of the banks. And that's where that's how money is really raised in this country. And I think that the finance people in the top tier companies, being so used to raising money from the banks, are shown to go and get structures to do corporate bonds and share issues, which they think is particularly tedious. So that's where you have the slowdown.
Okay.
So you're going to have this SMEs coming through the middle tier to see a very active new listings market again.